For the first time in more than a year, inflation in India has moved above the Reserve Bank of India's 4% target. Retail inflation rose to 4.38% in June, up from 3.93% in May. The increase was driven by a combination of higher food prices, rising fuel costs, and disruption linked to the ongoing conflict involving Iran and the United States. On the face of it, a rise from 3.93% to 4.38% may sound dramatic. But the development matters for three reasons. Number one, it affects household budgets. It complicates the RBI's interest rate outlook, and it offers one of the clearest examples yet of how the US-Iran conflict continues to influence prices in India. Hi, my name is Nupur and you are watching Control Z, your cheat code to navigating adulthood. So what exactly is pushing inflation higher? India's Consumer Price Index or CPI inflation accelerated to 4.38% in June. That pushed inflation above the RBI's 4% target for the first time in 17 months. Now food inflation also climbed to 5.32%, while fuel-related pressures also intensified during the month. Inflation is essentially the rate at which prices are rising across the economy. When inflation increases, households need to spend more money to buy the same basket of goods and services. The latest data suggests that the period of relatively comfortable inflation seen over much of the past year may be coming under pressure. The next question is why? The answer begins with oil. The conflict involving US, Iran, and probably the most controversial place on earth today, Strait of Hormuz. It has raised concerns about disruption in one of the world's most important shipping routes. Whenever traders fear that oil supplies could be disrupted, crude oil prices tend to rise. And when oil prices rises, the effects eventually spread through the economy. Transport becomes expensive, freight costs increase, businesses face higher operating expenses, and consumers ultimately end up paying more. According to economists cited by Reuters, rising fuel prices linked to the Iran conflict were among the factors contributing to June's inflation increase in India. Transport inflation has also accelerated after multiple fuel price hikes, but oil is only part of the story. Food remains the single biggest component of India's inflation basket, and food inflation rose sharply in June. Part of the reason was weather. A delayed and uneven monsoon raised concerns about agricultural supplies, particularly at a time when food prices were already under pressure. Economists also warned that weather-related risks could continue to affect crop output in the months ahead. This matters because food prices have an outsized impact on Indian households. Unlike many developed economies, a large share of household spending in India still goes towards food. As a result, even modest increases in food inflation are felt quickly by consumers. When food prices and fuel prices rise at the same time, inflation becomes much harder to contain. Until recently, markets were expecting inflation to remain comfortably around the RBI's target. That assumption is now being tested. The central bank kept interest rates unchanged in June but has already raised its inflation outlook. Economists are now debating whether further inflationary pressure could force the RBI to consider rate increases later in the fiscal year. Higher interest rates are one of the main tools central banks use to control inflation, but raising rates comes with its trade-offs. Higher borrowing costs can slow consumption, investment, and economic growth. That means the RBI faces a delicate balancing act. Act too late and inflation becomes harder to control. Act too early and growth could suffer. So should you be worried? Well, not necessarily at the moment. 1 month of higher inflation does not automatically signal a prolonged inflation problem. The RBI's formal target is 4%, but it operates within a tolerance band of 2 to 6%. At 4.38%, inflation remains well within that range. The bigger issue is what happens next. If oil prices remain elevated because of geopolitical tensions, and if food prices continue to rise because of weather disruption, inflation could stay above target for longer than policymakers would like. And that would have consequences for everything, from loan rates to household budgets. But June's inflation data is also a reminder that events far beyond India's borders can still have a direct impact on what Indian consumers pay at home.